Welcome to Finance News Network. I'm Chris Gosselin from Australian Fund Monitors, and today we're going to talk to two absolute return or hedge fund managers about what's been happening in the sector given the extreme volatility of the markets over the past 12 months. Today we're talking with Rick Steele from TechInvest, a market-neutral equity manager, and David Hobart from Aperion Global Macro, a discretionary investor in a range of asset classes. Gentlemen, welcome.
Chris?
It's fair to say September has been one of the most volatile months we've seen, and in fact the past 12 months has been one of the most volatile times anyone can remember on markets. Maybe you could explain how you're managing to handle this and what you foresee for the future, if you can foresee the future, over the next 6 to 12 months. Rick, maybe we could start with you.
Well, if I had to say it very briefly, I'd say we should expect more of the same. We haven't had an experience like this, certainly in my working lifetime. But for funds which can both invest and short sell, it does give an opportunity to take advantage of that volatility for investors in the funds that we manage. Dave,
how have you found it from a global macro point of view?
As Rick alluded to, Chris, they're certainly interesting times. We've managed to perform reasonably well through this period simply because we can both buy and sell a broad range of asset markets, equities, commodities, currencies and interest rates. So in some respects we've been reasonably immune from this, but it's certainly, with the increased volatility and drying up liquidity conditions, it's certainly been a difficult market.
Rick, you're an equity market neutral manager, so you would normally run 50% long, 50% short. What's your view on the ban on short selling and whether it's right or wrong and how it's going to affect the market?
Well, if I try and answer that question from a very high level, we're clearly in a very difficult position globally. We've got a financial crisis. We've got firms that have leveraged into assets that have now fallen in price. Unfortunately, the decision to ban short selling doesn't really bear on that problem. So I think that the short selling decision, it may have been important in terms of creating a break in sentiment and so on, but essentially it hasn't tackled the problem that we have, and that is we have some very fragile financial institutions, and that's the matter that has to be dealt with.
And you don't think short selling either way will fix that problem?
Well, it's interesting. In Australia, unfortunately, we don't have enough information about the level of short selling to determine whether, in fact, it was a source of the problem or not. I believe it's not, and I rest on the evidence we've seen in the US where, for example, Morgan Stanley and AIG, two of the big firms that have been under pressure through this process, have both only had very modest levels of short selling, less than 4% of shares on issue. So even for those firms which met significant periods of stress, short selling was clearly not the cause of their problem. Something else got them into that predicament, and therefore something else has to be used to get them out.
David, from your perspective, the ban on short selling's been in place for a couple of weeks now. It doesn't seem to have stopped the market falling, and it hasn't stopped the volatility. Do you think it's been effective?
I don't think that the short selling ban has had a positive impact on market pricing. It may have for a moment, but at the end of the day, if there's a portion of the market that expresses their views on the market from the short side, the moment that part of the market is removed, then there's only long participants remaining in the market. So if the underlying conditions haven't changed, then in reality, it's more likely, in my view, that the market will in fact drop like a stone. So it doesn't actually, as Rick alluded to, it doesn't actually address the underlying problems. Mm. In fact, it probably has an impact on liquidity, which is perhaps a negative impact, which wasn't its intended consequences. Mm.
So given the criticisms in the press of short selling, do you think the ban was more political than practical?
Well, I've got no doubt that the regulators and the policymakers had the best interests of the financial system and the economy at heart when they made up their mind on this matter. And bear in mind, it was done very quickly with very limited information. So I think we need to be fair and assess, give it time to be assessed properly. I think the downside, if there is a downside to making a change like that, is it does have a reputational impact on our market. And what investors really like is certainty. We understand what risk is. Risk is when you invest in a share market and the price goes down. uncertainty is when you don't know what the rules are about investing in a market. And my concern is that the temporary ban on short selling might actually have a lasting impact on people's perception of the Australian financial system.
Senator Nick Sherry has said that the purpose of the ban was to give some time to give transparency both of short selling and the stock lending business. Do you think this is going to cause other problems for the hedge fund industry?
I think the industry view on transparency of short selling is quite a solid view. And in April of this year, there was a white paper prepared by AIMA, which is the Alternative Investment Management Association. And in that white paper, they were quite forcefully putting forward the view that there needs to be transparency of reporting of short selling. The irony is, and here's the rub, if we only knew what the level of short selling was in Australia on the 21st of the month, then we may not have had that decision imposed on us, because I think the amount of short selling was more a question of hearsay than fact, and we needed to know the facts. So I would support full transparency of short selling, of covered short selling positions.
Rick, as a market-neutral hedge fund manager, where normally you're 50% long and 50% short, how are you handling the ban on short selling?
Yeah, well, that's a very good question because, as you said, in order to produce a fund which doesn't have any exposure to markets, you need to offset your investments with short sales. At TechInvest, we skipped the problem by being a global equity manager. We're only confronting bans in financials, which is only a very, very small part of our universe. But there's a very real problem for market-neutral funds in Australia, which they'll simply have to address at some point. I suspect right now that most market-neutral managers are retaining the short positions they have in order to manage the long position. But at some point, those short positions need to be managed and they may need to be closed. And once they're closed, while ever there's the ban in place, it will pose a problem.
David, absolute return and hedge funds over the past 6 to 12 months have been criticised across the board. Maybe absolute return funds have been the solution that people would rather have been in given their performance over the past 12 months.
From Aperin's perspective, we're not concerned as to whether the market falls another 20% from here or if it rallies 20% from here. Picking the market and having an attachment to the outcome of that, from our perspective, just gets in the way. We're actually able to profit from markets that rally, whether it be the equity markets or the currency markets or the commodities markets or the fixed income markets. So there are some options for investors in terms of the spectrum of markets they can invest in. And certainly from our perspective at Aperion, we're not wedded or concerned about the future direction of markets.
Rick, from an equity market neutral manager's point of view, do you think there's going to be as much opportunity both on the long and the short side over the next 12 months?
Well, that's the beauty of a market neutral fund, of course, because you don't have to carry a net long exposure to markets. So if markets are weaker, then that doesn't necessarily imply that the returns will be weaker. In fact, through this quite difficult period, market neutral funds have been the best performing group within hedge funds and presumably within the broader managed fund category. From memory, I think your survey shows that market neutral funds have had a return of over 10% in the past 12 months. Our own fund has had a return of almost 16%. So this clearly is an opportunity for funds to profit from uncertain times.
So maybe hedge funds haven't deserved all the criticism that they've received, and perhaps their diversification of absolute returns could be very beneficial in most people's portfolio.
Well, that's right. So the risks of having a short-selling ban, of course, is that you might just be taking away the one thing that mum and dad investors can actually have in their portfolio that reduces the risk for them overall.
Gentlemen, thank you. We'll look forward to catching up again soon. This has been Chris Gosselin from Australian Fund Monitors for Finance News Network. Thank you.